I'd like to welcome all of you viewers out there. I'm Sonny. I'm the guy, if you're looking at the picture, I'm the guy on the right with the red tie. And Pete is my partner over here on the left. And Pete, of course, is the original creator of Best Choice. And what I'm going to do here, of course, is take a moment to just fill you in on a couple of items and turn it over to Pete, who will go through the PowerPoint presentation. I want to thank all of you that are tuned in. We do have a wonderful audience. We have something special that we're going to be presenting to you later on in the program, so by all means, you don't want to miss it. When we finish the PowerPoint, there will be a 5-minute break. So at that point in time, we'll give you a chance to stretch your legs and do whatever you have to do, but it will be 5 minutes and everything will be back in action. So right now, with that, I'm going to turn it over to Pete. He is the man that started Best Choice over 35 years ago, and this has turned out to be the most incredible software in existence, and it does give you the opportunity to make fantastic or tremendous profits in the market. So with that, I'm going to turn things over to Pete, and I'll talk to you later.
Okay, thank you, Sonny. All right, well, let's get the show on the road here. Like Sonny said, first of all, we're going to present a PowerPoint presentation, and then we're going to go in live so that we'll take any questions. We'll look at stocks. We'll show you how we find great stocks, great opportunities. But first of all, we want to explain how it works. Okay, so you're listening tonight to learn how to make money in the markets, and of course, I am here to teach you. Let me first of all go over a little bit of my background so you know who I am and why I'm kind of qualified to do this. First of all, I've been in the markets for over 50 years. My father was a senior vice president and trust officer at the largest bank in Stamford, Connecticut. And back in the 50s, he was managing an $80 million account. So he didn't have the advantage of computers and the things that we have today, but he taught me a lot about the markets. Next of all, of course, I didn't want to do exactly the same thing as what my father did, so I got a degree in chemical engineering from the University of Connecticut, and I've been programming computers for the past 40 years. In the early 70s, I was a fuels officer in the Air Force, and in the late 70s, I built refineries for Occidental Petroleum in Libya, of all places. I taught at 4 different universities, everything from mathematics, computer science, statistics, chemistry, and engineering. So basically, I've had the background to build something like Best Choice software. Now tonight I'll cover what is Best Choice, seasonality, it's a guide to your profits, knowing when stocks are expensive, how to make money in the markets, basic money growth concepts, picking the right stock and option, and finally we'll have a question and answer session. Okay, so what is Best Choice software? It's a 5-part financial program designed to make you money. First of all, it finds the best quality stocks for long-term investing. Years ago, that's all I did, was look for great growth stocks and with good earnings. This is what my father taught me, that earnings are the foundation of all stocks, that if they make money, they become worth more. It finds the best stocks for short-term swing trading. It analyzes stocks for options. It shows us the right time to buy or sell stocks using seasonal charts. This is something that we developed. It's unique to Best Choice software, and it gives us a heads up of what's about to happen on individual securities. It covers futures and mutual funds, and it has a historical database of over 7,000 U.S. stocks. We have 20,000 mutual funds, 3,000 Canadian stocks are available. We've got the London stock market, options, indexes, futures, basically we've got about 35,000 different things that you can look at. And all of this data is stored on your hard drive. This makes our software incredibly fast. If it was stored on a server elsewhere, it would be much more difficult to pull down the data and take a lot longer time. And we have 2 built-in search wizards that help you find the right stocks or funds that meet your criteria. And most importantly, we have 2 videos that explain, 22 videos explaining how to use it. Everything that I explained tonight is on our videos, so when you get the software, the videos, they last about 10-15 minutes apiece, and they help go into greater detail on understanding things. Okay, so Best Choice Software was created on the following 4 principles. Always take a minimal risk. It's your money. If you lose it, that you want to always have a minimal risk. Trade only when the time is right. Use leverage options if available. And 4th, take the maximum profit in the shortest time. And it's an end-of-day program built using statistics and logic to find the right stock or commodity at the right time and make money. Like I said, when we built the software, first we built the long-term portion, and then we built the shorter-term portion for trading. So how can I make money in the markets? It doesn't matter whether you're a long-term investor or a short-term trader. You have to, number 1, be right about the future. This is what all trading boils down to, being right about the future. If we're right, we make money. If we're wrong, we lose. It's as simple as that. And 2, act upon your decision. It doesn't help to be right and not act. That's like being a Monday morning quarterback. I could have, I should have, I would have, but you didn't. So we've got to know now what's about to happen in the future. So how can I be right about the future? Well, in the future, there's only 2 things that can possibly happen. First of all, there's repeatable patterns, known events, such as like the Earth rotates around the sun once a year, and that creates the seasons that we have. That's a repeatable pattern. Earnings reports, they occur 4 times a year. Those are repeatable patterns. So what we want to do is build a trading plan based upon repeating events where we have a heads up of what we know is about to happen. Non-repeatable events are unknowns. For example, if I ask you when is the next tsunami going to hit or the next 9/11, hopefully none of these will hit soon, but we just don't know. These are unknown, non-repeatable patterns. And so if you're trying to predict that sort of thing, you're basically guessing. And in the markets, you don't want to guess. You want to have a good idea of what's about to happen. So what is seasonality and how does it affect the stock market? Well, seasonality is the study of a historical movement of a security to identify a predictable time in the future to buy or sell today with a high probability of success. You want to know what to trade tomorrow, next week, or next month, don't you? Okay, so our seasonal cycles will identify the probability that a security will move in a specific direction for a defined length of time before it happens. Man, that's what you want to know as a trader. I want to know this. Okay, so here's the question. Would you buy a security December 1st if you knew it had gone up 10 out of 10 times on December 1st in the past? Does that make sense to you? Well, this is why our Best Choice software owners are so successful. For example, if I ask you, what time of year do you think UPS and FedEx ship lots of boxes? All right, go ahead. You've got. You can type in. Tell me what time of year do you think you can that would occur? Christmas? What does everybody else think? December? November? Okay, you're all thinking right around this time of year. Well, let me show you an example of our seasonal charts. Here is what the seasonal charts look like. We see this yellow line in the center, and we can see that FedEx, yes, definitely moves between October and December. That's the strongest time of year. In the May to September time period, generally it goes down. Why would we want to be long during that time of the year? UPS, very similar chart. It shows it rises just before Christmas. And what we can do on our seasonal charts is that we can drag our mouse over a specific time period. Here we see FedEx. And notice the section over in November that's turned blue. And the legend to the right tells us the start date and the end date, when FedEx has gone up 10 out of 11 years. So we know that 90% of the time the stock has moved during that time period. And we see all the statistics down below, all the different years. So that's a high probability time to be right, being long FedEx. So let me show you another example of seasonality. Let's look at the Dow Industrial Average. Do you know what is the best time of the year to own stocks? Okay. Here is a picture of the Dow Industrial Average over the past 40 years. We can see that it's gone up and down, and if I show you the seasonal chart on the Dow, well, from this chart you can't tell. Well, notice this on our seasonal chart of the Dow, that we have a very strong move in late October, early November, that it's gone up 34 out of 40 years, which is 85% of the time. 85% of the time is a high probability. If we know that, we can see also the effect of Christmas is very, very strong on the Dow Industrial Average. So the white areas give us the information. The blue lines are 40 years of history. And the yellow line shows us the composite movement over that time period. So we knew ahead of time that the Dow had gone up 34 out of 40 years, starting as of the close of the 27th of October. That's 85% of the time. That's a fairly high probability. We also knew that the move only lasts for 2 weeks. This is a composite overlap of 40 years of the history of the Dow. We can do this on any security. So our best choice seasonal chart is the only tool capable of predicting this move with the 85% probability. And again, the important thing is we know ahead of time, and there's no other software that can do this, tell us about what's about to happen. Now let's talk a little bit about probability and putting it into perspective. If we had a one-horse race, could you predict the winner? Of course, that's a trivial situation where there's only one horse running. It's 100%, it's a guaranteed. That's what 100% means. Well, if we had a card game talking about probability, if you would pay me, if we had a deck of cards and we shuffled them, and if I turn over an ace, would you pay me $1 if I paid you $1 for any other card? You would have a 92% probability of success. You would win 12 out of 13 times. Same thing on a dice. If we had a dice and we rolled a dice, dice has 6 faces. Paying me on, if the 1 comes up and I pay you on any other number, you have an 83% probability of success. Well, what I just showed you, with the Dow going up during that time period, you have an 85% probability of success. So you see, with this kind of knowledge, you can see why our people are successful. Let me show you an example of how a total stranger had a $400,000 move in 3 weeks. At the August Money Show, a future customer asked me about MRX. I said it should go up tomorrow. This is what the chart looked like. It was in a total free fall. You wouldn't know that by looking at this chart. Well, if we look at the seasonal chart, here's what I saw. There is starting on that August 9th date, that had gone up 9 out of 10 years in the past, and that indicated a high probability that it would occur again. Now all the blue lines in the background are each individual year, so that's what builds this composite and lets us know what we can reasonably expect in the future. So based upon this picture, he went to a phone and called his broker. the customer bought 650 calls controlling 650,000 shares of stock. In the next 3 weeks, the stock had a $7 move. This amounted to $7 times 65,000, or a $455,000 move. Wouldn't you have been happy with this move? And again, how would you have known it without the seasonal charts? Okay, I understand short-term trading, but how do I make money grow over long-term? All right, here is a chart showing $1,000 starting at different growth rates: 10%, 40%, 80%, and 100%. At 10%, at the end of year one, you've got $100, so your $1,000 is now $110. Excuse me, $1,100. The next year, 10% of $1,100, you have another $110, so that brings you up to $1,210, and so on and so forth. Well, 40%, we can see at the end of year one, you've got an extra $400. 80% is growing much faster, and 100%, you're up over $1 million at the end of 10 years. As compared with the 10% growth rate, you're looking at $2,500. Big difference on growth rates. Okay, well, if I show you the same information on a regular chart, basically it is an exponential growth rate, so that we see that 10% hardly you're getting any appreciation, but the 100% growth rate, it forms an upward hook on a regular chart. Well, if in mathematics, if we take an exponential curve and we plot it on a logarithmic scale, basically the growth appears as straight lines. So we can see the 10%, 40%, 80%, and 100% growth rate. Okay, so what do great growth securities look like for long-term investing? Well, here's Apple's earnings over the past 10 years. Apple's earnings have grown from 3 cents to $43. In 10 years, that's 1,000 times multiplication. And basically, we see that upward hook of the growth curve. When we take the earnings information and plot it on a logarithmic scale, we see that, again, it forms a nearly perfectly straight line, and we calculate the earnings growth rate, which is about 86% compounded annually for every year over the past 10 years. Okay, here's the price growth rate on Apple Computer. Apple has, over the past 10 years, has gone from $6 to $600. That's 100 times multiplication. And again, when we put it on a log scale, we can see that the growth rate of Apple Computer has grown at 54% compounded annually over the past 10 years. So when we put the two together on the same chart, we can see the earnings growth rate and the price growth rate of Apple Computer. So Best Choice Software is the only program that shows price and earnings on the same chart. And this relationship is very important, because when we look at it, the earnings is what the company is telling you it's making. The price action is what people think it's worth. And in this case, we can see that Apple is still relatively undervalued in relationship to how much money they're making. Now, how about if I showed you Microsoft over the same 10 years? Whereas Apple has gone up 100 times, Microsoft is the same price today as it was 10 years ago. Look what a difference we see in this stock. We have a higher degree of volatility, and the stock is going nowhere. If I show you a stock like Central Fed Corp, which has gone from $90 down to $1 over the past 10 years, there's a good example of a negative growth rate stock. So, bottom line is, what are those three yellow lines, and how do I know when a stock is cheap or expensive? On a regular chart, you just don't know when to buy or sell. If we look at this chart, and we're over here on the right side of the chart, should we buy or should we sell? Back here when we were at the bottom, how would we have known that was a buying opportunity? Or here, or here? How did we know up here it was a selling opportunity at the tops? Well, when I go to the log scale, first of all, we calculate that center line, which is the average. Then we calculate that the second yellow line, which shows us buying opportunities which occur at the bottom band. And we show selling opportunities which occur at the top. It's a whole lot easier to see on the log scales when we show the lines. So the three yellow lines give us a measurement of the relative high and low. They give us a measurement of the growth rate of the stock by the slope of the lines. They show us the volatility of the stock by looking at the width of the bands, and they're a measurement tool of what has occurred in the past, while the seasonality is the tool that predicts the future. So in review, this is what we see in our best choice charts, and when we look at a regular chart, you don't know when to buy or sell. So is it any wonder people don't make the kind of profits that most of our people are able to make? Now, what are the extremes? This is a best choice software exclusive. That's the amazing three yellow lines. It's a daily rating of price between 0 and 100% that shows the current price in relationship to the average price. Here's an example. On this chart, we can see that the center line is set at 50%, which means that half the prices are above it and half the prices are below it. The lower line is set at 10 and the upper line is set at 90. So where price currently is on this chart, we can see that it is relatively high. It is the extreme is 99.7. Now, a few weeks later, as I step forward, basically the stock went back to the 50% zone and then crashed through the lower band, and now it's getting an extreme rating of 0.2. So we can see now it's too low. So the bands give us a measurement of high and low, as well as the volatility of the stock. So here's the basic questions that traders, investors have. What security should I trade? Is this the right time of the year? Should I be long or short? When do I exit the trade? How do I know ahead of time my probability of success? And these questions are all answered within our software. Okay, I know what great growth stocks look like, and I know when to trade stocks, but show me how to find these great stocks to trade or invest in. Okay, now I'm going to show you what our wizard looks like. I'll take you step by step how to select stocks. First of all, we start with a complete universe of all stocks using our stock search wizard. Then eliminate stocks, etc., that you're not interested in. Let's look at this search wizard. Okay, first of all, when we pull up the search wizard, it shows on the right all the exchanges that we have. We have the MX, NASDAQ, New York Stock Exchange. We have all the indexes, futures, mutual funds, the two Canadian exchanges, and the London Exchange. We've got 36,000 things to look at. So what we're going to first do is uncheck the exchanges that we're not interested in, and the number in the lower right-hand corner will drop. Okay, we can see that we've eliminated unwanted exchanges. I have left the MX, NASDAQ, New York Stock Exchange, indexes, and futures, and we can see the numbers have dropped down to 7,300. The next thing we're going to do is eliminate low volume stocks. Now, why do we want high volume stocks? What's the reason why we want high volume stocks? Good. We want volatility. We want we want liquidity on the stocks that we're trading. So if I want to see stocks with at least 500,000 shares a day, I move my scroller on up, and when I do that, my figure down in the lower right-hand corner has dropped again to 1,900 securities. So we eliminate low volume stocks. Next thing we select, if we're an options trader, we select options available. That means the stock must have must trade options, and we set in a price range where we're happy. In this case, I generally like to look at higher price stocks, so I set a range where I'd be happy, and we're down to about just under 100 securities. Now, these would be the kind of securities that I'd be interested in trading. Now, have I said anything about what time of year these stocks move? All I'm saying is these 97 stocks have the right criteria of tradable stocks as I've defined them. in my search wizard. So we're going to save them to a list by clicking the button. So now we go to step number 2, that now that we have 97 stocks that you might be willing to trade, we got to find out the time of year that those stocks move using the seasonal cycle wizard. Let me show you what it looks like. Okay, here's our cycle wizard. Now, first of all, we select the list that we've found as far as optionable stocks. That's what I called it. Then which shows we have 97 stocks. We have a set of conditions on the left, which we're looking for the smallest number of days in the trade, which is 14, and the highest is 45 in this case. We want a 90% win factor. That means 9 out of 10 or 10 out of 10. We want a minimum movement, either 5% up or 5% down. And we need, at the bottom there, we need at least 5 years of data so that we can see repeatable patterns. So when I click the Start button at the bottom, it tells me the results that we show on the right-hand side, the number of trades that is found throughout the course of the year. And here is a list of the results. For example, this was in October, showing when to get in and when to get out. Shows us the number of trades, the number of winners, the probability of success, and the amount of profits associated with each of the trades. So I know ahead of time what stocks I want to trade when. And there's the 3 icons, the search wizard, the cycle wizard, and the list. So once we find great stocks at the right time, should we trade stocks or options? Again, you can do either. But here's an example of why we trade options versus stocks. We look at the risk versus the worst case scenario. If you had a $50 stock, what's the worst case scenario? You could lose $50. If you bought a $5 long-term leap option, worst thing, you could lose $5. In a shorter term, say dollar option, what's the worst? You could lose $1. So from a risk point of view, the best choice is finding cheap options. All right, well, let's assume that the $50 stock went up $5. Well, if we bought the stock, we now have a stock worth $55, so we have a 10% profit. If we had bought the leap with a 50 delta, which means that we gain half of the movement of the stock, and the stock moved up $5, so we gain $250. So it is now worth $750. We've got a 50% profit. And if we bought the short-term option with a 50 delta, it is now $350, so we have a 250% profit. So from a profit point of view, the best choice is cheap options. So less risk and the maximum amount of profit. So this is why the options market has exploded over the last 10, 15 years. Back the same time, 10, 15 years ago, instead of having more than half of the stocks having options, there was probably less than 5% of stocks had options. Okay, so we suggest that you learn to trade options, but before you trade options, you must know something about the stock moves ahead of time. Will it most likely go up or down? And of course, our seasonal cycles can tell us that. So, to review, our seasonal cycles identify the probability that a security will move in a specific direction for a defined length of time before it happens. And again, would you buy a security December 1st if you knew it had gone up 10 out of 10 times in the past? That's why we find success. So, making money in the markets, it's not that difficult if you have the right tools and use them. You must be on the right side of a future price movement. But how do you know the future before it happens? The seasonal charts. So let me go over with you some of our users. We have one user took a $5,000 account in 2010, and at the end of the year he had $2 million. Another user is a $500 million hedge fund manager. He's got to know ahead of time what to do with that money. It's not his money, So either he's right and he makes his customers money, or he's out of business. And he's been very, very successful. Another user took 1,000 to 20,000 in 2 days, and they did it twice. Another user took an $11,000 account up to $1 million in the first year. Another user had 23 triples using options out of 25 trades in his first, well, I should say his second year of trading. And a brokerage firm that we work with told us that the total of all customers referred to them was up 40% in a 9-month period. So that's pretty good. That's a pretty good track record of what we have with Best Choice Software. Wouldn't you want to be a member of this group? Best Choice Software comes as a complete package: stocks, options, indexes, futures, seasonal cycles, and ETFs. Now there's 2 data services that we use, National Data and Dial Data. These are 2 data companies that we need the quarterly earnings to not only show the long-term patterns, but show when stocks move because of earnings announcements. I haven't gone into that, but during the live program, I'll show you that. So you know the old story, if you give a man a fish, he'll eat for a day, but if you teach him to fish, he'll eat a lifetime? Well, it's not true. He still needs the right tools. Education is not enough. Like the fisherman, you may be a good trader, but you still need the right tools. Best Choice Software is that tool. So at this point in time, this is the end of the PowerPoint presentation. I've gone through it as quickly as I can to basically get the information out to you so that we can get into the live portion of the software. We'll take a 5-minute break at this point in time, and then we'll show you how to use the program to make incredible profits. So here's our number again. Give us a call. We're going to take a 5-minute break so we can switch over to the live program, and I'll be back here in 5.
Okay, we're back. Now, let's show you how to use the program. Up across the top, we have a lot of icons. Obviously, a telephone right here. If we click on that, every night you download data, you hit the word start. It takes about 2 minutes to download today's data. We have, as Pete mentioned in the PowerPoint, we have some icons up here that pertain to searching and looking at the wizard for timing. Here we have the icons for changing the picture of the program. And down here on the right is a little toggle that we can turn off the earnings and just look at the price. And as we mentioned before, this icon with the hook changes your chart to a regular chart, no lines at all. Our default is the 3 yellow lines. This is where we know when stocks are too high and too low. You can see, I don't know what we're looking at here now, Yum Brands. And up the top we have some arrows where we can move stock back and forth. In this case, I'm going to use this arrow and back up, and I'm removing a bar on the right, bringing a bar in on the left, and I'm going back to that low bar. Now, Pete mentioned in the PowerPoint about the extreme, and here is the measurement where we're down here literally at 0, and you ought to think of a stock as teeter-totters. They get too high, or they go down. They hit the ground, they're too low. When you're looking at the 0 or virtually 0 over here, you would expect this stock to turn around, and we'll go back, and now all of a sudden look at the bars and you can see the price going up just as we expect. So this is a visual on a daily basis of when a stock is too low and too high. If you're going to do short-term trading, there's an icon up here for candlesticks. And generally, I have mine set for a default of 3 months. So, once again, candlesticks, and there's legends to show you if you have a doji or shooting star, you have a hammer, engulfing patterns. All of this is part of the program. And no matter where we are, we can click this one with the blue lines, and this shows you the seasonal. So let's go back to a stock and start from the beginning. We're going to use our search wizard, and we're going to pick set some conditions. So the first thing I'm going to do is scroll down where I'm going to list by exchange, add it in, and here's what you saw in the PowerPoint, but we're going to get rid of the exchanges that we don't want to look at. And in this case, we're down here to 8,700 stocks. The next thing we want to do is we want to set that volume. And as was mentioned, we don't want stocks trading 5 shares a day, 4,000. So we use the arrow on the right over here to bring up the bar, but it's faster if we grab it with that double arrow. And we're going to raise it up, looking at the numbers on the left, to about 500,000 shares a day. 490, 530, well, we use the 490, close enough. Now we have dropped from 8,000 down to 2,100. We want to make sure, we're going to set the price first. And for this example now here tonight, I'm going to move it up. And because we like to do options, but that's a choice. You don't have to do the option. You can play the stock. But we like to get up about $50 a share. Now we've dropped it down to 536 stocks. And of course, if we're going to do options, we certainly have to have options available, which is a true or false statement. So now we're down here to 425 stocks. Well, I'm not using my computer, and at this moment I don't know why that number is so high, because generally it comes up to a lot less. So I'm going to change the price just a minute. We just dropped it, and I'm going to raise the volume a little bit higher. And I'd like to get this down to a couple of hundred stocks. Wow. Let's raise that price just a little bit. All right, we have 254 stocks. Now, these are the conditions that we have just used for this training, this presentation, where we have 600,000 share of volume and a price about $60 a share. So we're going to save them to a list, and we always recommend that you use the day that you make the list. So in this case, I think today is 11/28, and we'll call this Evening Web. Okay, now we're going to save them to a list. The search wizard, this search wizard is the most powerful wizard ever created. It's a search engine, and we have never seen anything in existence as powerful as this is. We set conditions, pick up the stocks, and as was shown in the PowerPoint, we selected stocks, but we don't know anything about their timing. So we're going to go down here, and here's the list we just made, 11/28 evening webinar, and we have 254 stocks. Now, I set conditions, and these are all variables. I'm looking for a trade at least 7 days and nothing longer than 35 days. And in this particular case, I want to see 100% repeating stocks. They have never failed to move every year, and I like to look for a 10% move. Once again, nothing less than 5 years of history. We do like to know that there's some reliability here. So we're going to hit the word start. We're going to save them to, and here's this, let me show you over here. We have a 12-month calendar, and it's all zeros. So we're going to save the search into a list called 11/28 evening web cycles. We click OK. OK. And now you can see up here at the top, the computer is analyzing each one of these 254 stocks. And when it finds these conditions, 7 to 35 days, 100% repeating based on their history, with an average move of 10%. When it finds those conditions, it's filling the calendar. As you can see it over here, it's populating it and it's showing us what month do they happen. Now look at the results. We have 110 stocks going up, and we have 9 that have never failed to go down, and this is strictly based on their history. And as was said in the PowerPoint, probability. You cannot use the word guarantee, but probability. Now, if we have November, look at this, with 21 stocks, and of course November's almost over with. But there's our list of, that's our calendar, all filled, saved into a list. So we're all done here. And now we go up to the calendar, the cycle trades, and drop down arrow, we'll pick up the one we just made, which is right here, 11/28 evening webinar. And here are the 12 months, and each month has a number behind the month, and those are the number of trades we have that month. Some could be going up, some could be going down. And you can see with December down here is pretty thin. Now there's 5 trades, 4 going up, 1 going down. And if you look at Joey G up here, if you notice, it shows you the starting date, typical date of when the trade begins, and when you get out. That's based on the movement of a stock. In this case, it's 21 days. And number of trades is 10, which means we have 10 years of history. So therefore, we had 10 trades with 10 winners. And we never had, based on the past, there was never a losing trade. So you can see in the column here, they're all 100%. And every one of them have an average profit of over 10%. Now let's go in and look at March as an example. 23 trades. 23, and every one of these stocks are going up based on the past. And if you look at over here, they're all never had a loss. They're all 100% repeating movements. And as Pete said very clearly in the PowerPoint, you have to be right about the future. So this is the way you make money, by looking at history. Now here's November, had 23 trades. Here's Bucky, 7 trades, 7 winners, and that obviously included this year. AMT, the trade is not over with yet. So this is how we pick our trades, and the calendar, we have the list of them. Now, over on the right, up here at the top where my mouse is a users list with a drop-down arrow. And if you just made your list and you haven't closed down the program, that will be always on the bottom. Once you close the program, then it'll alphabetize. But right now, let's look at this list of stocks. And there was the 254 stocks. And here they're set by, listed by the symbol alphabetically. So you can see, now we're not, obviously we're not trading all 254 stocks, but this was what met our conditions for price and volume with options. Now, let's do a different search. Going to come in, and I don't know what, on this computer, there's a list called Sunny. And here's my conditions. Same as before. Options, current price of the stock, and the average volume. And you can see down here now, without changing these from my basic settings, 359 stocks. Well, we're going to do something in this case a little different, because not everyone out here is familiar with options. And there is a little learning curve. And by the way, anyone who gets this program tonight, we will be doing some option training somewhere after the first of the year. Right now is not a good time with all the holidays in here. Plus, we would like everyone to get used to the program. And then later on, after the holidays are behind us, we're going to be doing some training. But in this case now, I'm going to change my price. I'm going to do a different kind of a search. And I'm going up and bring this down to about, let's go to about $5. And I want to also bring the top down, because if you do not know options, you still can make a lot of money by buying lower price stocks. So let's go down to, we'll go down to $10, from $5 to $10, just to give you an example. Well, that's only 213, so I will bring it up a little bit. If I go up to about $12.50, here's the price up here, and I'm still using my 500,000 shares. And even though these are priced between 5 and roughly $12.50, I have 226 stocks, and I'm going to save these to a list. And once again, saving them by date. 11, back up, Sonny, you made a mistake. Tell you the 28th, and we'll call this low price. And we'll save that to a list. Okay, the wizard is done now. This is a different search. And the reason I'm showing you these $5 to $12 stocks, when we get all done running the wizard, which we're going to do again, and here we are, 1128 low price, 266 stocks, and once again an empty calendar. We'll hit the word start, and we're going to save them in a list. And now we're going through the 266 stocks, looking for the exact same conditions, 7 to 35 days, with 100% repeating, and an average move of 10%. Now, the reason I'm doing this is, if you're not acquainted with options, but yet you find stocks that have never failed to move and they're low priced, I feel that everyone could start out by buying some of these stocks and make money where you're not worrying about options or time. You're just hanging on to the stock and see when it moves. Now it shows us here we have 166 going up, which is visible right here in the column, and 86 going down, which is 252 trades. Now that's a lot of trades. Okay. Let's close down the wizard now. We're all done. And we'll look at the stocks themselves. Once again, drop down arrow, pick up the list we just made, and look at what we have in January. 21 stocks. And they're divided pretty equally. Here's 10 that are going up, 11 that are going down. Looking at December now, you see with the lower price stocks, we have 15 of them, 12 going up, 3 going down. All of them have never had a losing trade. They've all repeated themselves 100% of the time. Let's see which one has the most. Wow. November had 48. This is behind us, closed out. But if you look at most of these, well, here's one PPC. From the 18th to the 26th, 8 days, 12 years. Let's click over here and take a look at the season. And here is that movement that we're looking at over here, where from the 18th to the 26th, 12 years, 12 winners. Now, we can see this is exactly what happened, and here's every year, year by year. But let's go and look at the stock. And this time we'll change this down to 6 months. Did this stock go up? How would you like to have that? Now we're looking at a low price stock. At the start of the month we were $5 up to $7. Is that almost 50% just price growth? Let's go back and look at another one. November. Let's see what 12 out of 12. What's this guy here? We don't know. There's your move. Look at this. 11 years, 11 winners, November the 17th. Now, this is the value of best choice. Knowing ahead of time when the stocks are moving. Now, combination of things here. Is this stock down? Let's back up till we get to this bar, and we want to see what the extreme was reading at that time. So I'll back up. I'm taking off a bar. I'm bringing in a bar, so I'm holding exactly 6 months. Look at this. Extreme. 0. Down here less than $6. You know ahead of time. Well, I shouldn't say you know ahead of time. In this particular case, we are looking at the stock and knowing that it's literally at the bottom of the move and it should turn going up, and you can see what's happening. And this is in a very short period of time. Now, in this case, if you own the stock, look where it was a month ago in October. $10, almost $11. Came down. Up here it was above the yellow line where it was extremely high. Now we're extremely low. So you can see how these stocks go up and down, up and down. Let's look at Advanced Auto Parts. Look at Apple. Wow. Was Apple down here at the low? Look at the extreme. Look at that, almost 200-point drop, extremely low. Your point was too high. We could step ahead. Look at this. Look at that move in about a week. There is no other software in the world where you can get this kind of a picture and a reading over here where you know that you're too high or too low, in addition to the season. So you have so many different ways that you can use the program. We're looking at, there was November's. Let's look at January coming up. And by the way, January, February, and March are 3 of the best months of the year. There's your March. And I'll see if I can show you something here, because very often you'll see a symbol here and up above. I don't know if it's going to be at the top, but let's see if we can, if it is up there. I want to show you something interesting. Nope. Let's look at January and see if we can. Now here I'm looking to see if I can see the same thing top and bottom. ALY. Well, I don't see on any of these, I don't see the same stock, although I don't want to bore you to death, but normally I would take a little longer to look at it. Zag up there. The reason I'm showing you that, if you see the symbol up here and down here, you look at your dates. Sometimes you'll see a stock will go down. Let me maybe bring this one back up. Okay. You might see a stock here that goes down from the 1st to the 9th. And the same stock could be up at the top, and you'll see it either after it's gone down, maybe on the 10th, the 12th, the 15th, you'll see it goes up. And that is a pretty neat trade where you can play both the up and the down based upon the seasonal. I don't see it here, any of them at this moment, but I'm not going to dwell on that one. Okay, that is the way we pick stocks. First we start with conditions on the wizard. We pick the conditions. After you have that list, you have to know what is going to happen in the future. So now we use this cycle wizard, pick up any of our stocks, the list of stocks, and then hit the start button and let the computer analyze the history of the stock and show us by placing it at the right month and telling us if it's going up or down. Now my question is, do you see how easy it is to make money? Or, as I like to say, it's not difficult to make money in the stock market. And that's because we have such an advantage with the best choice that no one else out here can show you the things that what we are doing here tonight. So with that, if Pete's around, I'm going to bring Pete back in here and let Pete, as the professor, come on in and Pete, take over and see you can put some of your expertise.
Okay, yeah.
And put some knowledge, further knowledge for these people, okay?
Mm-hmm. Let me show you something coming up in January. Sometimes when we look at these charts, we look at our seasonal charts, and let me show you, say, a couple tech stocks. If I show you Microsoft, MSFT. Now notice in January, from January to March, typically Microsoft goes down. If we drag our mouse, we can see it's gone down 9 out of 10 years. If I show you Cisco in January, what does Cisco do? Cisco typically goes down January to February.
Now, Pete, you might want to show them how you're getting these different stocks.
Well, okay. All I have to do is type in the symbol. All I do on my computer. Let's say we want to look at Oracle. I just type in ORCL, hit my enter button, and bingo, it comes up. And we see Oracle also drops that same time of the year. If I show you Google, another tech stock, what does it do at the beginning part of the year? Again, we're looking at a trade. Look at the first part of January. You drag your mouse. It has gone down 6 out of 8 years. Okay, that's a high probability to the downside that time of year. I showed you a whole bunch of tech stocks that drop that time of the year. In the PowerPoint, when I was showing you like this time of year, what do we have coming up? We've got Christmas coming up. That's a major retailing event. So we can look at stocks like FedEx, FDX. We see that goes up. We can see UPS goes up prior to Christmas. Coach, another retailing stock, goes up prior to Christmas. Gap Stores, GPS. Look at, just drag your mouse and it tells you 9 out of 12 years. That's a high probability there for Gap Stores. So I think we've learned so much using the software. Just even the old statement, sell in May and go away. If we look at the Gap Stores, is that true? That generally May comes around and the stock drops? Why would you want to be long this stock during that time period? Let me show you another couple stocks when we talk about seasonality. We just got back from Las Vegas. And when I was out in Las Vegas, I was talking to people out there about Las Vegas in the summertime, how it's 115 degrees. And so if I pull up LVS, which is Las Vegas Sands, and we look at the seasonal chart. Now, notice all the blue lines. You see, in the summertime, there's no blue lines up at the top, which means the stock has never ever hit a high in the summertime. It's always at its rock bottom low. So we can see it falls in the springtime and rises in the fall. And let me show you one of my favorites, ESI. Now, one thing Sonny didn't mention, earnings comes out 4 times a year, and I show these little green dots. We notice over here in January there's an earnings report. Over here in April there's an earnings report, one in July and one in October. Now they don't come out on the same day, but it's Saturdays and Sundays that can shift it a couple days. So I show a couple of dots for all the different years. Now notice over here in January, after the earnings comes out, the stock typically has a big jump. And if I drag my mouse over this time period, it tells me the stock has gone up 12 out of 12 years. Now I can click on the individual years. Like if I click on 2005, you see the big jump right there? 2006, you see another big jump right there? 2007, 2008, 2009. Every year I'm seeing a big jump taking place right there. Now the stock typically moves 15% during that time period. That's a huge move. And if we know ahead of time that that's when the stock moves, that we have this earnings report coming out causing a big jump in the stock, well, we have a heads up on it. We know we got a great earnings play on that stock. Now, would you do an earnings play over here where the stock basically does nothing? No, that's not a play. We can look at some other good stocks that we like. Priceline, PCLN, earnings play over here in February. Will you drag your mouse? We have Netflix, NFLX, a good earnings play over here in January where the stock goes up 10 out of 10 years. You know, after you've played with this software, and you see these trades, you do them a year after year. We had one customer on Trimble, TRMB. Notice over here in April where the stock goes up after the earnings report. He first traded it in 2006 and he had a triple using options. In 2007 he had a triple right here. In 2008 he had a triple. 2009 he 7 times his money. 2010 he 8 times his money. 2011, he 2.5 times his money, and this year he lost. Okay, he was right 9 out of, well, the stocks, it's worked 9 out of 12 years, but he wasn't right all the time, but still the massive amounts of money that he's made when he was right more than offset the one time that he was wrong. So the seasonal chart is really an incredible chart that we never realized how powerful it was until we started using it. When we built it back in 2004, we really never realized the value of it. So anyway, I've showed you a couple other things. Sonny's here. Did you have a... okay, wait a minute. Oh, we had a couple questions coming in. Mike has asked the trial period. The trial period, when on using the software, if you get a trial, is for 3 months. Is there any way to backtest? When we built the software, Mike, what we did was instead of going back 10 years, we took from a year ago going back 11 years and saw how well did it predict the past year's behavior. And out of 102 stocks, it was right 90 of the stocks, and those were 90%ers. So we felt pretty good about that. What is the rating? That's a good question. Notice the colors over here on the right on the rating. When we drag our mouse, it's either green or let's see. Let me just set it for the best rating of the whole zone here. Let me see if I can. Oh, see here it's pink. And when we have the ratings, the color, what it is we rate each trade based upon 3 factors. First of all, the probability of success. In this case, 8 out of 10, or excuse me, 8 out of 12. it would be better 9 out of 12 or 10 out of 12, or certainly 12 out of 12 is the best, highest probability of success. So that's one. Now the second thing is the percent of profit. Obviously on one trade, if I made 5%, in another trade I made 50, the one that I made 50% is better. So not only the higher the probability of success, but the higher the percent of profit you make on a trade. So we just multiply those two numbers, and the higher the raw number, the better. The third factor, the third and final factor that goes into the rating is the number of days. Let's say on my trade I made 5% in 50 days and you made 5% in 5 days. Obviously your trade is better because you did it in 5 days. So the lower the number of days, not the higher the number of days. So the first two factors, the higher the better. The third factor, which is the number of days, the lower the better. So we divide, and then that gives us a rating, which allows us to compare all trades, one versus another. It doesn't matter the stock, it doesn't matter the probability of success, it doesn't matter the number of days. You're treating them all equally. And so when we have a pink rating, it's a lousy trade. Don't take it. When you have a green rating, that's a great trade. And then the third color we have, let's see if I can pull one up. It's blue. Maybe I can't find one on here. I'm just dragging my mouse on different there's a blue trade. That's mediocre. That's 10 out of 11. It's not as good as 11 out of 11. One other thing, if we look at a stock, I've never ever looked at it before, what I can do is drag my mouse over the entire screen and it will pick out the absolute best trade on that particular stock. Again, any security. Is there any securities you guys want me to take a look at? Just type them in. Okay, we'll take another look at Priceline, PCLN. Okay, so Priceline, if I pulled it up, all I have to do is drag my mouse over the whole entire screen, and we'll pick out the absolute best trade, which is right here on Priceline. Okay, Mike, you want to take a look at SHW? Sure. SHW. Okay, there's the seasonal Sherman-Williams. We can look at the long-term chart. I can go back and look at a 10-year chart on Sherman-Williams. Pull up the price. There's the earnings. There's the price together. We can see a very nice correlation between price and earnings on Sherman-Williams. Okay, more recently we can see the earnings have been taken off, and so has the price. If we look at the seasonality on Sherman-Williams, picking out the best time of the year, drag my mouse over the whole entire year, looks like it's been in November. 11 out of 12 years. Look at this year. You see this year it's the average is about 5%. This year it's up 7%. So if I click on 2012, we can see the jump that it had right here, right after the earnings came out. See, now notice the stock had been backing off. They announced the earnings, and then the stock shoots up. So this is probably an earnings play right here, that the earnings comes out. It's a blue trade, which is not the greatest, but it's the best one on Sherman-Williams. It's gone up 11 out of 12 years during this time period that just recently passed. So you like that? It's pretty cool stuff. Any other stocks that people would like to see? Okay, Coach. Let's take one last look at Coach. That was a Christmas trade. Drag our mouse. There we see green. 12 out of 12. This was one that I showed at in Las Vegas. We were out there a couple weeks ago. This is a trade that started on the 20th. It's 12 out of 12. And that's, related to this time of year. One other group of stocks that I like to show is the energy stocks. If I look at the ETF, USO, we see energy stocks have a big strong move in March. They've gone up 6 out of 6 years. Look at the energy stocks. Look at from February to May. You see this on the ETFs? February to May. Now, if I show you Chevron, CVX, February to May. If I show you ConocoPhillips, February to May. If I show you Marathon Oil, February to May. I can show you some other, like a coal company, BTU. That goes up during that time period. Even a uranium company goes up that time of year. So that's a strong time of the year for the energy markets. And of course, we can see weak time periods too, both strong times and weak times. So I've showed you a number of things that we've learned from using the software. It helps us become better traders, helps us to know ahead of time what to expect.